direction. The prices may move back and forth in the top, as for a while they may be, as I mentioned before, maybe in this little box right here for a little while. And this suggests to you that there's some weakness going on here. The momentum is not there, not like it was, especially when we were at the high of the range of 14. And so that we possibly are in sight of a potential topping type of an action. Now, another thing about the predicted differences, and we're going to clear these out here, and we want to make a note of this, is that when we look at these predicted differences, we're going to go way back and show the full year, without being too confusing here. But you will see that when you put a horizontal line across the predicted differences, when they get up to about plus 30 cents or so above that zero line, not the line that goes through the middle, when you get above that, that indicates that this is a potential topping area. Now, make no mistake, there is no limit on how high it can go, but traditionally, when it has gotten up to that point, it has seen times like markets do, where they go up and then they go down. Well, this is kind of one of those clues that here may be a point in time when it would start hitting down. The same is true on the downside when you put that line there at minus 30. So that's kind of a general range of the predicted difference that you can use as another clue to indicate kind of like that overbought, oversold type of a situation. When you look at the markets, again, we're going to cut back our time frame here. We got more data than we need, and we're going to cut this time all the way back to a 2-month time frame just to get the current outlook and talk about what is happening to soybeans currently and how we might trade those as as the market moves ahead. First of all, when we talked about that, we can't forget that we again have our traditional technical analysis clues that we talked about before. For example, we have the this doji on top, and we have this bearish candle here. So we know there's some things going on there that we're looking at. When we look at this doji on top, you can see that the indicators have started to turn. We're kind of getting a little waffling, and they're turning down. The predicted differences are starting down, and the neural index has dropped to 0. So that's also you put those all together and suggest that there are some weakness that is going on in the market. But what we don't know now in this case is we don't have any definite rule or kind of a standard as to where are we going to get in, at what point are we going to get in. So we're going to throw in another indicator on top of what we already have here, and at the risk of getting too much stuff here all at once, we'll try to keep it clear through our explanation. We're going to add the predicted high and the predicted low, which is another indicator available in Vantage Point. The predicted high is that you can see that gold line that's on the top there. That line indicates that that's the predicted high for tomorrow. You can see that we have a projection from today. This predicted high is what we can see as the expected predicted high for today that was made yesterday. Predicted low is that pink line that you see there, kind of running across the bottoms there. And so we want to be able to use that, to get some specific points at which we might trade. Now, there will be some days that we are going to, again, be very cautious and very clear because, it's not real clear. And I mentioned before, the August crop report day that we had was kind of a crazy day there. You probably rule out some kind of a trade due to the report, due to the volatility there and the possibility of, not getting in where you expected to get in when the session opened, because there is a time break between the release of that data in the Midwest and our central time zone between 7:30, the release time, and 9:30 when the market opens. And so you have a tendency to have some big jumps in there. And that makes it difficult to trade that, to get some kind of a smooth action to get on board that. But we'll assume that somewhere there in that vicinity you decided that you did have the clue, you did have the breakout above the predicted high, and that you might have gotten long in the vicinity of 1340 or something like that. My normal gauge, way I usually do this, is that I will trade if the market, the predicted high here, if the market moves 20 cents above that predicted high, I will buy. And then I will set a stop 10 cents below the entry point to protect myself, so I don't want to take that big loss. Now, in the case of soybeans, of course, 20 cents is $1,000, and 10 cents $500, and so I'm not willing to risk a whole lot. I'm not going to risk more than $500. If I possibly can, I want to keep it at 20 cents because that's been just kind of a rough approximate average daily range. I don't want to be in the market until I kind of see that trend shaping up and moving higher by that amount to indicate the market is moving in the direction that I want to be moving. I want it to go together. Now, when we look at this chart, as it started to move up, you can see that the market moved up, pretty nicely. You keep a stop, as I said, 10 cents below that predicted low. As the market moves up, you just keep your stop 10 cents below that. You have a little blip right there, but the price did not drop 10% below the predicted low. So you're still in there for that whole stretch. And you know that right now, at this point, is where we were talking about this last year. We were getting to that $14 high. So you need to be more alert there and make sure that you have a stop there to protect yourself because it could back down from that $14 high, just as well as not. In this case, it happened to move higher and you would have stayed long. As the market did move up, and we want to make sure that we don't get stopped out too soon, but we don't want to get stopped out too late. That too late is a worse sin than too soon. September 1, we came up to a point where we had this candle that I mentioned before, this other candle after the doji. We had a predicted low on that candle of 14.48, and dropping 10 cents from that, to keep our protective stop in place means that we would sell to exit a long position at 14.38. If you recall, we were in at about 13.40, so we got about $1 move in on the long side, roughly a profit of that. Now, as the market moved down, you want to make sure that you don't, again, get in too soon. So we're going to say it has to go down 20 cents below that predicted low before we would establish a short position. We know we have the trend down in the predicted difference. We know they have the Neural Index at 0. So we're going to drop into this market here, or attempt to get into this market here at the predicted low 14.48 minus 20, or at 14.28, which put it somewhere right in there on this day right here. Now, in this case, we had a kind of a conflict here because we know that we have another USDA crop report coming out in just a few days. We know that we've had kind of a crazy season in terms of weather, and that has affected yields, and we've had various reports, various tours like the Pro Farmer Tour and some others, that yields were not going to come up to what people expected or what people hoped. And so you have to wonder if the market is going to go down. If the crop's really bad, then you probably are not going to want to be short. You want to make sure that you don't get caught short if the market suddenly takes off and moves higher. But we don't know that. Only thing we know is that there's a crop report, and based upon what we do know about weather, or what we have heard about weather, is that we could have had a limit move either direction. Also, it just was that volatile in the case of soybeans, and also in the case of corn. The other thing that we had going on in about that time frame is that we got a weather forecast that said we were susceptible to freezing weather in the upper Midwest, including some of our areas to the west of us in Iowa, Minnesota,